Steelmaker ArcelorMittal South Africa expects first-half headline losses to increase by over 200% because of higher costs. The company, majority owned by ArcelorMittal, forecasts a headline loss per share in a range of 143 and 152 cents for the 6 months ended June 30, up from a loss of 45 cents per share in the same period last year. Its share price fell over 5% on the announcement. The company said margins remained constrained despite higher steel prices. And Acacia Mining PLC says it is heading for the lower end of its range of its production forecast this year as a result of Tanzania's ban on exporting gold concentrate, which took its toll on earnings in the second quarter. The gold mining company, whose controlling shareholder is Canada's Barrick Gold, says earnings before interest, taxes, depreciation and amortization fell 34% to $79.2 million in the 3 months to end June, from $119.3 million a year earlier, on a near halving in revenue to $157.8 million from $284 million. Gold production fell 6% to 208,533 ounces, though for the 6 months to June 30. Output was 4% higher at 428,203 ounces from same period a year earlier. In the meantime, Tanzania has asked foreign employees of London-listed Acacia Mining to leave the country in an escalation of a dispute that began in 2016 over allegations of tax evasion. Our 2 senior local staff of the mining firm, Tanzania's largest foreign investor, were detained and interrogated at an airport this week, and reports say the arrests were related to the dispute. And still on precious metal issues, gold held steady on Friday near a 3-week high and was on track for a second consecutive weekly gain, underpinned by a weaker dollar and U.S. political uncertainty. Heightened political concerns surrounding investigations into President Donald Trump's campaign ties with Russia are currently the key driver supporting gold prices. Spot gold rose 0.1% to $1,245 per ounce after touching a 3-week high of $1,247 an ounce. In the previous session, it is up about 1.4% for the week so far. U.S. gold futures for August delivery fell 0.1% to $1,244 per ounce. Analysts say spot gold may test a resistance at $1,250 per ounce, a break above which could lead to a further gain to $1,261. Still on commodities, oil prices notched up on Friday ahead of a key meeting of major oil-producing nations next week, but held below the $50 per barrel level that was briefly breached for the first time in 6 weeks in the previous session. International benchmark Brent crude futures rose 6 cents to $49.36 per barrel in the thin trading. U.S. West Texas Intermediate crude futures were at $46.99 per barrel, up 7 cents. During the previous trading session, both benchmarks rose to their highest level since early June in choppy trading, having been pushed higher by data showing U.S. crude and fuel inventories fell sharply last week. Despite the drop, U.S. oil stocks at roughly 490 million barrels remain well above the 5-year average, while U.S. production has increased almost 12% since mid-2016 to 9.4 million barrels per day. And away from the markets here in Nigeria, the Nigeria Association of Chambers of Commerce, Industry, Mines and Agriculture, NACIMA, has commended the economic recovery and growth plan launched by the federal government in April this year. In its economy review recently in Lagos, the national president of NACIMA, Alaba Lawson, says to achieve the goals of the ERGP, proper implementation of policy plans are needed. She maintains that early passage of the national budget is key.
The challenges are in aspect of proper implementation. And I repeat, the challenges are in proper implementation, monitoring, tracking, feedback, and information dissemination. We call on all ministries, departments and agencies, MDAs of government in charge of the key activities and programs in the ERGP to set out measurable guidelines of their key activities, which can be tracked and assessed. NACIMA, as a foremost member of the organized private sector, has within its reach a wealth of experience in human capital and ideas from the organized private sector and can contribute to the realization of the ERGP goals. In view of this, we call on the federal government to ensure that timelines for each milestone on the ERGP 2017 to 2020 are strictly adhered to in order to achieve the expected dividends. Nigeria's debt profile is already quite high, although in terms of the debit to GDP ratio, it is still among the lowest in the world. The association is of the view that if the government must continue to borrow, it must be for investments and capital projects, infrastructural development, and not for consumption, paying salaries. As at March 2017, the nation's total external debt was $13.8 billion US, compared to June 2016, when it was $11.2 billion, indicating a 23% increase. The nation's ability to service our increasing debt is mainly hinged on revenue from crude oil, which has plummeted from over $100 per barrel in mid-2014 to around $46 today. It is also important to note that whatever government borrows, internally or externally, it is in direct competition for financing with other borrowers, especially the private firms.
And finally, Mauritius' trade deficit widened by 18.6% to 8.25 billion rupees in May from the same period a year earlier, driven by higher imports of minerals, fuels and lubricants. The Statistics Office says imports rose 6.3% to 15.28 billion rupees, with minerals, fuels and lubricants up to 2.66 billion rupees from 2.41 billion rupees in May last year. Export revenue fell 5.3% to 7.02 billion rupees. France was the main buyer of goods from Mauritius in May, accounting for 11.9%. India supplied 19.3% of Mauritius' imports. And that's a wrap on today's edition of the program and, of course, for the week. Thank you very much for watching. Enjoy the rest of the weekend.